For the time being, let's shift focus. Let's talk about a couple of the stocks that did well yesterday, namely ABB. Well, to understand those numbers, the repercussions for the sector, as well as the outlook from here on, we have Amit Mahawar, Executive Director, Institutional Equities at Edelweiss, who joins us. Hi, Amit. Thanks so much for joining in. Well, ABB's numbers, there were a lot of positives out there. The street liked it as well. How would you view the stock from here on? And what's the read-through for the industry on the whole? Is there a big recovery underway? Go ahead.
Yeah, thanks for having me here. So on ABB, they started the calendar 22 with a very strong order intake. If you compare vis-a-vis last 3-year average, it was still, a growth in high double digits in order intake. And the highlight of the result was a very strong anti-trend results in terms of margins. Everybody's expecting gross margin pressures to impact overall profitability in the near term. And in that scenario, ABB surprised positively with a very strong margin rebound. I think that was the main reason why generally there was a positive surprise in ABB.
Amit, hi, good morning. What do you like in that space really? And anything looking attractive now to your mind?
Hi, morning, Prashant. So I think typically in industrials, we have, a set of two different, valuation range stocks. So you have L&T and Bharat Electronics, where I think the valuations are broadly, still not that stretched. And I would call them attractive vis-a-vis the growth they offer in the next 2-3 years in core businesses. And then you have set of, high-end technology MNCs like Siemens and ABB, where I think valuations are not easy. That always has been a challenge. But if you see the business, growth perspective, right from both cyclically and structurally, I think ABB and Siemens have been, our picks on the industrial automation and electrification space. So these are the 4 set of best picks we have. And we are slightly cautious on exports, entities which are very heavily into export, where you've seen a very good growth in last maybe around 2 years or which might be at a medium-term risk.
Amit, good morning. I believe you also like a stock like Hitachi Energy. If you could tell us the rationale for that.
Yeah, morning. So I think in Hitachi Energy, it's basically one of the largest players in transmission equipments, and they play around technology. And they will be the beneficiaries of HVDC awards as and when they pick up. And they also have a very large business from railways and, around high-speed rail. They have a very strong offering platform. So I think Hitachi Energy is largely going to be, in terms of next 2 to 3 years, if you see the order intake profile, both in electrification, high voltage, and on the mobility equipments, I think that's where they will be benefiting.
Right. Amit, you track the consumer durable space as well, right? Amit?
Yeah, for sure.
And what are your thoughts there? I mean, Voltas's reported numbers, I mean, that entire space, and there is the wire and cables company, I think, which you also track, Polycab, and I think, your thoughts?
So I think generally, we are more optimistic on industrials vis-a-vis consumer durables. Consumer durables, we are slightly, at least for the near term to medium term, we will have multiple challenges, including input cost, pressure, which has been impacting profitability. We saw how numbers in past, couple of days have come where very sharp, impact on profitability. But in general, one has to be very cautious here, but, you have to focus on very strong leaders. So our topics here are, we basically upgraded Whirlpool a couple of months ago after 2-3 years of negative view. If we believe the worst might be in the bag for Whirlpool. And we also have Voltas, Havells, and KI as one of our top picks there. We are generally more optimistic on electricals as a space. It's pretty resilient. In last maybe couple of months, you've seen some, valuation correction also, which I think is also healthy. Because the way the stocks rallied around restocking and pent-up demand around COVID, right now you are seeing some normalization. So I will be opportunistic, but very careful with, tying up with selective, robust leaders.
Just on Whirlpool, what's going on here? I mean, it's seen a one-way decline. I know you said that perhaps this reward now is favorable, but what to your mind is going wrong here?
So I think generally speaking, so Whirlpool is still the third largest, white good company. If you see generally after LG and Samsung in refrigerator and washing machine, they are still dominant leaders. I think in last around 2 years or to 3 years, they faced a lot of competitive challenges, as we understand, and which also is reflecting in their past few quarters of performance. So I think generally speaking, they are pretty concentrated in their business around refrigerator and washing machine. Roughly around 65 to 70% of the business is ref and washing machine. And in other categories, the revenue segment is still smaller, and they had a very strong competition impact, and which also reflected in their profitability. So I think that was one reason why you saw pretty weaker earnings in past couple of quarters in Whirlpool.
Okay, we'll leave it there today. Thanks a lot for joining us, Amit. We'll now do one thing. We'll take the 9-10 call.